Welcome back to the Worldwise Wealth Podcast. In this episode, I sit down with Robert of the Contrarian Capitalist. This is truly an eye-opening episode, especially with all of the volatility that has been happening recently in markets across the globe. Robert really dives into his case for why gold, silver, and a few other precious metals are so important and why now is the best time in the last decades to start purchasing these precious metals. He also dives into how he stores them, what capital gains and taxation looks like on them, and so much more. This is such an informative interview and you don't want to miss it, so let's dive in.
So a bit about myself. At the moment, based in Mexico, originally from the UK, hence this accent. And my business partner and I over there, we have a property portfolio. So he deals with a lot of that at the moment, if not most of it, at the moment. And then because of well, not because of my wife, but through marriage, that's why I find myself in a different part of the world. So that's a bit of the overview of business as it is. Why did I start getting into precious metals? Well, 2020, I think a lot of people had a lot of spare time on their hands, whether they wanted to or not. So just throughout my time, or time off in this case, then I started just you know digging a little bit into gold, silver. I watched a series on YouTube that got me really started on it, and then from there just kept learning and realized that actually what what was happening at the time is similar to things that have happened before, and then looking at what happened in gold, silver, for example, and how they can help to protect yourselves and other things. I just started deep diving into that, and that all led to the Contrarian Capitalist podcast and Substack that got launched a couple of years ago. I've done it part time, but then when I knew I was moving, that's when the podcast and Substack has gone full time. So that is a an overview of where we are today.
Awesome. I love that. And I love that you really saw that history was starting to repeat itself in a very interesting point of history and really took advantage of that for yourself. So you mentioned in there that gold, silver, some of these alternative investments have helped you to protect yourself in other areas of life. So I'm curious what that has looked like for you as you do live a very global citizen lifestyle.
So gold and silver are very useful throughout time. They always have been. Now you're going to have people that will say, I like to call them money because they are a store of value. Whereas the fiat currencies that we have in the world, whether it's the British pound, the US dollar, insert other currency here, that is a fiat currency. They're not really a store of value if we're being technical about it. So gold and silver are true money, more so gold because the silver's got a lot of industrial fundamentals. In terms of how it's helped me, well, what gold and silver and apologies if I keep flip flopping between the two because they do have a lot of similar characteristics, but sometimes some of the characteristics are more applicable for gold. So apologies if it sounds like I'm flip flopping. It's done on purpose. Gold is ultimately a wealth preserving asset. It's true money, God's money, as people will say. It's fungible, divisible, malleable, all these sorts of things. But over time, it has proven to hold its value and preserve wealth. People will call it an inflation hedge as well. I like to call it an inflation hedge. And I was having a chat on Substack the other day when someone mentioned about, well, I've had to, gold isn't that useful because, prices keep going up. That's true in fiat currency terms, they have. But and people give this comparison all the time. If you went to buy a really good suit back in 1920, 1930, that suit would probably cost, a good suit would probably cost an ounce of gold. If you'd done it today in 2025, that suit would probably cost an ounce of gold. So in gold terms, actually, although the price of that suit has gone up considerably in US dollar terms or whatever currency you want to use, in gold terms, it's still the same. So it's a fantastic wealth preservation asset. How it's helped me, it helps me sleep at night, to be honest. It's the I like to say it's the stupidity of others in terms of a macroeconomic sense means if people want to keep being daft with decisions about X, Y, and Z, ultimately that's probably going to be more beneficial for the gold price, and so be it. So yeah, I look at it from a very long-term point of view in terms of physical holdings, and it's not a short-term thing for me. It's a very, very long-term play.
Okay, interesting. Very interesting. Thank you for sharing that. So, from a curiosity standpoint, I'm just curious. It sounds like you are not really spending your gold, not using it. It's stored away somewhere and it's there for the long term.
Yeah, and more so it is more so the silver as well, because we'll touch on the gold and silver ratio in a minute. The ratio at the moment is incredibly high, which values silver at the moment. But yes, in everything is locked away in a different continent, in a different place. I don't actively check the price too often. Reason for that, I mean, I do so for some of the newsletters, so I have to go in and check it and look at the analysis from that point of view. But in terms of thinking, very long term with gold and silver, I'm not looking at a particular price point because we're sort of at the start of a major commodity super cycle, which, what a lot of people will say is that in the next couple of years, we're likely to have a very severe recession, which could lead to some form of depression. I don't know whether that's going to happen, but it could happen. And then from there, because of currency printing, inflation, etc., you're going to see real assets go through the roof. Gold, silver, oil, natural gas, you name it. So it's a very long-term perspective. But yeah, they're all locked away in storage in a completely different part of the world. And yeah, I don't think about it too much apart from writing the newsletter.
Awesome. So if somebody is interested, and I'm thinking more of the storage perspective, but I guess just generally, if someone's interested in getting into this space, obviously your Substack and what you do is a great source of information. I know that firsthand. But what are some of the key resources, points that you would direct someone toward? And then within that discussion, I'm also curious and no need at all to share where you are storing, but where are some of the more common countries, places? What does storage of these assets look like for somebody who is looking to get started in this?
It's a very loaded question, Nicole. Thank you. I'll do my best to go through it. So, in terms of resources, there are a plethora of books out there, podcasts, and content that you can read and listen to. I'll always say, obviously, go to contrariancapitalist.substack.com. I've done many a podcast on the qualities of gold, the reasons for gold, and also looked at various storage mechanisms and what you can do in order to store your bullion. Ultimately, there's no right or wrong. It's whatever works for you. I know people that will have some bullion in their own homes. I know people that don't like that. People will put it in all sorts of places, back garden, under the stairs, under the floor. But you can put it wherever you want. Some people don't like putting it in their home. Fine, that's fair enough. In that case, some people will like to put it into storage. If you speak to your local, bullion dealer, whatever continent, whatever country you're in, again, I'm sure your local bullion dealer will be able to help. Again, there's also a lot of information online about the storage of products. So really, a lot of that's down to you as an individual. What works for you? If you want to have, I don't know, $150,000 worth of gold lying around your house, so be it. That's completely your choice. If you're not comfortable with that, just in case the worst happens, then go and put it into storage. In terms of a storage no-no, do not put it with bank storage. Not good, because the whole point of having physical bullion is you are probably wanting to get out of the system. So do not put it back into bank storage, because if there are banking collapses, which possible, it could happen given everything that's bubbling under the surface, the banks will get closed down. And if the banks have got your bullion, good luck getting that back. So do not put it in bank bullion. You can use a company such as Brinks. I know a lot of really good people in the gold space will always mention Brinks. and Loomis. But ultimately, yeah, you do your own homework, do your research. In terms of myself, in terms of jurisdictions, I'll say Switzerland and parts of the UK is where mine are stored. But in terms of jurisdictions around the world, yeah, people will have it in the USA, people will have them in Singapore. Switzerland, in terms of the continent of Europe, is normally the most popular destination for bullion. But ultimately, it's down to the individual with regards to where they want to put it. And again, there are so many different bullion companies out there. The only big no-no I would say is do not put it in vaulted storage within a bank. That's the only no-no I have. The rest of it, again, is up to you as an individual about what you're comfortable with, what you're not comfortable with. And it's about mitigating that risk. Don't put all your eggs in one basket, and do what works for you ultimately.
Interesting. Thank you for sharing that. So and this is just very much so out of my curiosity in looking for storage around the world. What are some red flags, some no-nos that you see, maybe often see, sometimes see in these companies? And then what are some things that somebody should be looking for?
Well, always the best thing to do is look for a recommendation. So what I can do for people that are listening that would like recommendations of UK companies, I'd just say, just message me on Substack. I'd quite happily have a chat or give some recommendations from companies that I've used personally, and they've been fine. So I'm happy to do that. In terms of international, again, any company that looks at or works with either Brinks or Loomis, that normally means that getting from A to B is pretty much as secure as you're going to get. And always look at the contract. So a biggest fear that I have personally, and this may or may not happen, I don't know, is if we do head down that route where gold is confiscated, then what does that look like in the contract with storage with regards to third parties? If gold is recalled by your mother country or your father country, whatever it might be, does that bullion then have to go back? Now maybe that's just me being a little bit paranoid, but that was my biggest fear before putting things into storage. But ultimately, yeah, recommendations are the key thing. Look for Loomis, look for Brinks, look for a storage company that will audit as well. Some companies will do that once a year, sometimes twice a year. And you want to make sure that it's segregated storage. So, i.e., your bullion is in your name, it's secure in a location, and although you might not have physical access to it, so for example, the bullion I've got in Switzerland, I got that through a company in the UK. Am I able to go to Switzerland physically and view the bullion and do X, Y, and Z? No, I'm not personally. I'm okay with that because I'd have no plans to go to Switzerland anyway. Not because I don't like it, but I just have no plans to go there at the moment. So I'm okay with that personally because I've got my receipt. I know my name's on that piece of bullion. I've got the storage number. I've got the serial number of the bar. Personally, I'm okay with that. Ultimately, recommendations and word of mouth in terms of storage. In terms of red flags, not really any red flags that come to mind if you follow the recommendations and the Brinks, Loomis and auditing that I've just mentioned.
Awesome. Thank you. Such great information there. And as always, I think with a lot of things in life, a recommendation goes a far way from somebody that you trust. So I'm curious, and I see that you are doing this all the time in your Substack and your newsletter, looking at market updates. Are you only in gold, silver? Are you in any other positions? Because the market has been very interesting. I haven't been tracking specific to precious metals, more so index fund stocks, crypto. It's been interesting the last few, even just weeks. So I'm curious if there's anything additional that you are buying or selling, and what that has looked like for you in recent weeks or months.
It is a bit chaotic out there at the moment. Volatility has definitely increased, to say the least. On a personal point of view, I have a very small portfolio of miners, and that's just using cash from a really old job years ago. So, I mean, the value of that is pretty much null and void, to be fair. But that portfolio is doing okay at the moment. I think it's about 17 companies you got in there. Again, the majority of them are gold or silver mining companies and actually uranium companies as well. So from a stocks point of view, that's where that is. But as I'm quite clear on all the, the special like newsletters that go out, that's not life and death to me. It's a couple of £1,000. I'm not overly bothered by that, to be fair. Although I might add to that in the future. Sounds too blasé, I know, but I'd rather be truthful than not. Physical bullion's the biggest position by far. Absolutely the biggest position by far. And again, that they're all tucked away somewhere. I always look to add to the physical position. It's my biggest play. It's my biggest belief. And that at the moment is gold and silver. Very unlikely I'm going to be adding to gold at any point soon because of the ratio, which actually I'll go into in a bit. And then the only other metal that I've mentioned quite a bit that I haven't taken a position in it yet is physical platinum. And again, platinum's got a lot of qualities, but it's a lot rarer than gold and silver. It is potentially got a big use in green or hydrogen production because it could be used for EVs. Now, again, there's a lot of hoo-ha about how environmentally friendly they are or they are not. Platinum is very volatile. So again, looking at the platinum to gold ratio, it's incredibly low, historically low at the moment. So that could potentially create a good play moving forward, arbitrage wise, because it can be more volatile and susceptible. Going back on the gold and silver ratio, the wrong reason I've not done platinum yet is because silver is my focus. So silver at the moment, let me just bring up some numbers to back this up. So if at the time of recording, believe it or not, gold is about $3,300 an ounce, US dollars. In pound coins, because I like to look at it in pound coins, it's just under £2,500 at the time of recording. Silver, $32.50, give or take. And then in pounds, £24.51. So if we look at the gold and silver ratio, basically the gold and silver ratio is how many ounces of silver can you buy for an ounce of gold. And at the moment, that ratio sits at around 102.5. That is historically very high. The highest that ratio has ever been is 2020. Where again, a lot of stuff going on in 2020, but that ratio hit 122. So in effect, you could buy for 122 ounces of silver, or you could buy an ounce of gold. At the moment, it sits at about 102. So my belief, and I should say I'm not an independent financial advisor. Please do not take this as financial advice. Just having this as a friendly conversation. My personal play moving forwards is that ratio is ridiculously high. There's not been many times in history that's gone above 100 to 1. So therefore, it screams at the moment it's a very good opportunity for silver. So my theory is that ratio has to come down. And if I just get onto my desktop, I want to just share some form of graphic. So I'll give you some examples of the gold and silver ratio throughout time. So in the time of Alexander the Great, so ancient Greece, about the 4th century BC, the gold to silver ratio was 15 to 1. In times of Caesar in Rome, it was 8 to 1. In Italy in 1275, so the height of the Medici and so forth, it was 8 to 1. And then in France in 1600s, it was about 14 to 1. And then in Great Britain between 1700 and 1720, it might not be Britain, it could be the continent of Europe, it was about 15 to 1. Now, bear in mind that we've just said that at the moment it's 102. There's a bit of a difference there. So my theory is that ratio is going to go down. So ultimately, it's going to go closer to, it could, In the last 40 to 50 years, the average has been about 50 to 60 to 1 in the last 40 to 50 years. So theory being that that ratio is going to go down. So if we keep the numbers simple, let's just say it's 100 to 1 for argument's sake. If we keep the numbers simple, at today speaking, you could buy 100 ounces of silver or 1 ounce of gold. If you buy 100 ounces of silver and then that ratio does go down to say 50 to 1, well, you could swap that silver for 2 ounces of gold, because obviously 50 and 100, just divide it by 2. So you could possibly double your gold holdings without really doing anything. That's what I'm looking to do moving forwards. It's also why platinum could be a good play, because that ratio is very low at the moment. I think it's about 0.3, but historically it's been completely the other way around. So i.e. you need 3 ounces of platinum basically to buy an ounce of gold. But only back in, I think it was 2008, it was about 1 to 1. So there's a big difference there. But for me, that's why silver's very attractive at the moment. That ratio is incredibly high. It's screaming opportunity. The differences between silver and gold is silver's got a lot more industrial use, and it's more volatile than gold, because if there's bad economic news, then the chances are it goes down. There's also a lot of shenanigans in the paper silver market I'm not going to go into. It's incredible to watch it get slammed pretty much by the paper markets every day. It's almost just, it's laughable, to be fair. But moving forwards, again, silver's very good well, on the darker side, it's used a lot in war products, you know, bombs, all that sort of stuff. Not good, but let's be realistic of where certain parts of the world are. So that use could go up. It's a fantastic conductor of electricity. So it's got all of these qualities. And again, it's money. It's been part of bimetallic systems over history. The high of silver was about $50 in 1980, 1981. So silver is not even anywhere near, in dollar terms, its all-time high, which is ridiculous. So there's just so much going for silver. And again, this is why it's always important to have a plan. So again, if you're thinking, well, I like this ratio, I might just buy. And, if that gold and silver ratio goes down, obviously there's no guarantee it's going to go down, but history would suggest that it's got to go back to some form of normality. If that's your long-term plan, that's great. This is why I always say with any business, whether it's setting up a Substack or, of course, doing what you do with your plethora of international clients that you have, know why you're setting it up, know what your plan is, and go from there. So if your plan is to take advantage of the ratio and buy a bunch of silver and wait for that ratio to go down, you might be waiting 5 years, you might be waiting 10 years. But if you've got the plan, then you know what to do. And thankfully it's something that my wife and I agree on, that silver's a way to go for now. Aggressively buy it as much as possible, because that ratio is too high, and then hopefully, well, hope isn't a strategy, but history would suggest that ratio goes down, and then at some point it would be a case of converting that silver to gold, and voila. So that's a very long-winded answer there, but hopefully that provides some information into the metals. In terms of stocks and so forth, again, I've just got a small mining portfolio. I do keep an eye on the markets purely because, again, as part of the newsletter, we do cover precious metals and also the major indices. And I mean, there's just so much volatility out there at the moment. And yeah, there's two sides of the fence. I believe that they're going to go much higher before it all go breaks, basically. And it's not just tariffs. There's a lot of issues with bond yields, credit spreads, yen carry trades, all sorts of things at the moment. My summary on it, and I've written this before, but I'll say it again. My theory on this is as follows: that you don't have to like him, you don't have to like him or loathe him, whatever you want to do. Trump is very clear, has been very clear, and also Scott Bessent has been very clear about what they're trying to do. There's a lot of, the US has 37 billion, or is it trillion dollars, sorry, of debt. Now, a lot of that's, or about a quarter of that is actually due for refinancing in due course. Now, if you're going to refinance that, and I'm sure we'll all think the same, if you have the option of refinancing something at 5% or 2%, the chances are you're going to want to refinance it at 2%. So if they're going to do that, they need to get those bond yields down. And if you're going to do that, you need to create a bit of chaos out there in the markets, which they've done. Scott Bessent also came out and said that they could potentially look to monetize the asset side of the balance sheet. Now, the balance sheet at the moment of the USA, gold is valued at $42.22 on the balance sheet. We've just said that at the moment it's trading around $3,300. So my theory is that Trump and Bessent want a higher gold price. Now, if you want a higher gold price without saying you want a higher gold price, the best thing you can do is cause absolute carnage in the stock markets. Get everyone panicking, do this, do that. We've seen the Chinese sell off treasuries or starting to sell off treasuries. And as a result of that, that's putting pressure on the dollar index. But also from the proceeds, we're seeing that there's a lot of buying of gold, which is, again, there's two ways of looking at the gold price. It's either the price going up or it's the value of the currency going down. You can argue they're both sides of the same coin, pardon the pun. It depends on which way you want to look at it. So my theory being that they need lower bond yields in order to finance a lot of that national debt at a lower level, which makes sense from a numbers point of view. And if they're going to actually monetize the asset side of the balance sheet, they're going to need as higher price of gold as possible. So just using that as my theory, they're on the right track. Yeah, again, you don't have to like them or love them. And they've been very clear from day one. If you just go on to Trump's website and look at Agenda 47, they have been very clear with what they're looking to do. Again, you don't have to like them, you don't have to love them, you can hate them, I don't care. It's an apolitical statement. The point is, he's actually coming in. No one's perfect, but he's coming in and generally speaking, doing exactly what he said he's going to do. I think from a political point of view, I don't think you can ask much more than that. Coming in and doing what he's going to do. That's my theory anyway. Lower bond yields, higher gold price. And again, you need to create a bit of carnage at the moment. But I know that there's also a lot of underlying challenges, structural challenges in the financial markets, derivative markets anyway. That's a different podcast. Point being that the future is bright for gold and silver. The only thing that will negate that is it will likely happen at some point, is a very nasty recession. If you think there's been a lot of panic in the last few weeks, wait until the stuff hits the fan, because everything will sell off. Now, when everything sells off, I don't know what prices are going to be like. That's the time to buy. If you are ever going to buy physical metals, if you can get hold of them, of course, there's no guarantee you're going to be able to get hold of them. That's going to be the time to buy, because from there, it goes off to the moon. They really should go off to the moon as part of a commodity super cycle, because what will happen? Banks will come to, central banks will come to the rescue. That means more printing of currency, and then the inflation story continues. It's just like the 1970s, to be perfectly honest. So that's where we're at. That's why I always say to people, look, gold and silver, they're the biggest plays. You could look at platinum as well. They're just the advantages of gold and silver. They get you out of, they help you to decentralize. They help to preserve your wealth, more so gold. It helps to preserve your wealth. They are an inflation hedge, in my opinion. Again, fungible, divisible, store of value over time. Yeah, 5,000 years of history of this stuff. They really are both incredible elements. And again, it's not a financial recommendation, but if you are yet to take a position, I'd highly recommend you do so, because things that make gold go much higher, again, devaluation of currency, could be war, which I don't like to say, but let's be realistic. That could happen. And yeah, the dumbness of people in the financial world and the financial system, you might as well be on the winning side of a trade. And that's my belief, that if you have a physical holding, then you're going to be in a good position.
Really great information. Thank you for pulling out the numbers, sharing all of that info, Robert, and your insight. Doing this day in and day out. So you mentioned there, to kind of wrap up, great positions to be in if you can get your hands on it. So what does that look like if somebody is interested in getting started in a position now, or maybe as we go a little bit further down the line into a potential recession. I know I'm looking at crypto markets, but you're looking at very different markets. I want to hear what that looks like to get into positions for you.
So for myself, it's really about adding to current positions. If you are yet to get started, then the common advice out there is just dollar cost average into it. So, buy if you put aside $500 a month or whatever the number is, just dollar cost average into it, and you'll be okay. Again, have the long term plan, have the understanding. Why are you doing it? So if you're doing it because it's a store of value or whatever reasons that you want to be out of the financial system, whatever it is, create your plan first, create your why, understand why you're doing it, and then that way you're not going to get put off too much by uh, the changes in prices. More so in silver because it is more volatile price wise than gold. That's the best place to start. You could dollar cost average. Of course, if you sat there and you've got even more and you just want to put a lump sum in, again, not financial advice. I just recommend that you go and do some homework, look at potential tax implications. And I mean, that varies country by country. So at the time of recording, from a UK citizen's point of view, if you buy, so we have things called Britannias, which are 1 ounce. Well, they come in all sorts of denominations, but they're predominantly 1 ounce coins. This is gold and silver. You can get half ounce, quarter ounce, whatever. At the moment, they are what we like to call legal tender. So therefore, there is no capital gains tax on them, should you then go to sell them, because they are defined as legal tender. So there's no capital gains tax on the coins, the Britannia coins. So you have to be buying the Britannias, no other coins, if you're UK citizen. If you are taking storage, as in you are ordering and then having it sent to your home, there will be VAT to pay on a majority of silver. So just bear that in mind. That's 20% at the moment. This is why potentially buying and putting it straight into storage is useful, because you're not paying the VAT. So if you buy and it goes straight into storage without delivery, there's no VAT, so you save 20%. So yeah, Britannia coins at the moment, capital gains tax exempt. Gold is VAT exempt, so that's fine. Silver is not. If you take delivery of it, you have to pay VAT. If it goes straight into storage, there's no VAT. If you are buying ingots or bars, then again, in terms of VAT, in gold, there's no VAT on it. They are not capital gains tax exempt. So if you do go to sell at some point, you will be paying capital gains tax at the time of recording. The same in silver. If you take delivery of those ingots, you are paying 20% VAT. If you go straight into storage, not a problem, no VAT. By the way, if you put it into storage and then take delivery at a later date, you're still liable to pay VAT, just FYI. So you can't get around the system like that. And again, on the ingots, they're not capital gains tax exempt. So again, you will be paying capital gains if and when you sell. If you're a UK citizen and you buy, for example, a gold or silver eagle, which is USA coins, basically, again, you will be paying capital gains tax on them. They are not CGT exempt. So that's just from a UK point of view. So we're quite lucky at the moment that if you are buying Britannias, and they have to be Britannias, that they are capital gains tax exempt. Of course, you work with a lot of international clients, so that might not even be applicable. You could just buy whatever, and if you're in the right jurisdiction and you're set up in the right way, it's not a problem. But at the time of recording, that's all that information is correct as far as I'm aware. Going back to your question, sorry, yeah, you could just dollar cost average in, that's fine, not a problem. Again, you can pick gold, you can pick silver, you can pick whatever works for you. I am personally looking more so at silver because of the reasons we've discussed with the gold to silver ratio at the moment. That's what I'm looking at. Silver is much cheaper, dare I say, to purchase at the moment, so it might be a lot. It might be more easily accessible to a lot of people. But yeah, you could just dollar cost average in, and again, with whatever country you're in, with whatever you're doing, again, look for those recommendations. Again, for listeners that are in the UK or would like to purchase in the UK, just send me a direct message on Substack. I'm happily give those recommendations. These are companies that I've used before, that I've purchased from before, so I know they're good. In terms of outside the UK, I'm not really able to help too much. I just do some Googling, get onto some gold and silver communities and go from there. So yeah, have a plan. You can dollar cost average in, or if you just want to go hell bent and go in straight away, feel free. The only thing I would recommend on top of that is just keep a spreadsheet. That's what I do. How much have I purchased? When did I purchase it? How much did I buy it for? What was the market price at the time? Because I like to know the difference. Did I pay VAT or not? And then say my wife and I've got a big spreadsheet of everything, and it just helps us move forward. But you don't have to do that. But again, if you ever go to sell, for example, then you can see exactly how much you potentially have made moving forward. So I'm hoping all of that information helps. And it is quite easy to get started, especially if you're in a place like the USA or the UK, and it's very easy to just buy online. Not as easy to do so in Mexico. We've tried, but again, so this depends on the country, but we're quite lucky, certainly from a UK point of view. You can just buy it online. It will get shipped to you the following day, next day delivery, all insured. It is quite a wonderful thing and a blessing to have. But yeah, never too late to get started. I wouldn't necessarily recommend waiting for those prices to go down either, because then that means you're putting your eggs in the basket of a giant recession, which I think is more than likely, but we can never be certain about these things. And of course, with the amount of demand that's being placed at the moment on both gold and silver, again, should they then sell off as part of a recession, there's no guarantee you're actually going to be able to buy it at those very low prices. So that's why the cost averaging is probably the best way forward.
Awesome. Thank you, Robert. So much good info. I was going to ask you, but I think it's better if they just private message you if anyone has a question of, I guess, UK specific, maybe US, where to buy. So you can message Robert. Robert, please share all of your platforms, your Substack, and where people can find you.
Yeah, thanks, Nicole. The best place is contrariancapitalist.substack.com. That's where all of the work goes out, to be fair. If you can always actually find the podcast on places like iTunes as well. So that podcast is there. And yeah, contrariancapitalist.substack.com. It is the main platform that I use. I am on LinkedIn, I am on X, but they're not used that often. And with contrariancapitalist.substack.com, again, you'll have access to all the podcasts. I normally I do a weekly wrap every Friday, a weekly open newsletter every Sunday, also a monthly wrap newsletter. So at the last day of the month, I'll always do a market analysis of that. There are so many great podcast guests that we've had on in the last 6 to 8 months. So that's a blessing to do. And then also we like to deep dive into different elements. So I've just written a couple of pieces on the history of gold with regards to the UK, looking at Great Britain's golden era in the 19th and 20th century. Looking at, in fact, the article the other day was from all the way from the Iron Age all the way up to present day. So a wide variety of information. And we also do some deep dives on different elements as well: palladium, platinum, uranium, rhodium, so forth. So that's the best place to find me. Again, if people have got questions, yeah, more than happily help. Go and subscribe. You can do that for free. Feel free to do that. And yeah, do send me a DM, and I'm happy to pass over those recommendations, especially for UK people that were looking to do so in the UK. Not a problem at all.